What is going on, investors? Hopefully you guys have a great day out there with the stock market pulling back. I wanted to walk through a couple of companies that I think are approaching areas where we can certainly buy the dip on these ones, both from a fundamental perspective, but also from a chart and technical perspective as well. We'll actually take a look at both of those things. Now, the first stock I think is obvious here is Facebook. This stock is pulling back on a number of different reasons. First of all, the broader markets are pulling back. Also, we have some very negative news out with Facebook, which is nothing new to the company, but we'll discuss that as well. Now, complicating matters just slightly is that all these stocks, in fact, the entire stock market is on the brink of reporting earnings here in a few weeks. And in Facebook's case, we're going to report on October 28th on this one. So it complicates it just a little bit because those earnings days can make the stock swing around even more. And so if we do buy the dips on these stocks, we probably want to tiptoe into them and then see what happens after earnings. We get a little more certainty after October 28th, at least in the case of Facebook. Now, first thing to realize is this stock is up huge year to date, okay? Just since January, Facebook is up 25%, which is just a massive move. Any stock for a given year is that's a fantastic return. And if you can do that over several years, I tell you what, you're going to make a lot of money in the stock market. So we're not at all concerned as Facebook starts to pull back. In fact, we get a little bit of excited because I think this stock is worth owning. Now, when we're talking about the broader market, Facebook is outperforming the S&P 500. This year, the S&P 500 year to date is up 16%. So if Facebook were to revert back to about where the market is, still got a ways to go, but it'll still be positive for the year. So it's just some things to keep in mind. Now, the negative news just more recently with Facebook revolves a little bit around this quote unquote whistleblower that says the company has prioritized their profits over the safety of both the children and the general public. So this whistleblower is saying that, especially when it came to kids, that Facebook would do things that would put profits ahead of potentially your children's safety. And she also gave the example of January 6th, where we had the riot in the US Capitol. She also blamed that also on Facebook. So I'll take a step back and I'll say, if your kids are doing something unsafe, is it Facebook's fault or is it the parents' fault? And then when referring to January 6th, I think there was a lot of things that contributed to that. Is it Facebook's fault? Or is it actually somebody else's fault? So I'll let you to decide on that. I think as time goes on, people will realize Facebook is in the business of making money. The other negative news is that Facebook is facing antitrust and legal litigation from regulators across the world. Now, this FTC antitrust case was initially thrown out by a judge, but they allowed the FTC to revise the complaint and resubmit it, and that's exactly what the FTC did. Now, this complaint revolves around that the FTC is mad that Facebook acquired Instagram with FTC approval, and they acquired WhatsApp, again, with government approval, not here in the United States, but around the world. They acquired both those companies. And because both those companies are doing absolutely phenomenal, it has led to quote unquote a monopoly type situation that Facebook has. Now, Facebook initially got a judge to throw this out. That is a good sign. But what Facebook is seeking now is for it to be thrown out, or in this case, dismissed, this case with prejudice. Now, I'm not a lawyer. I don't pretend to be one, but I know enough. With prejudice simply means that the government can't come and resubmit this complaint. If it just gets dismissed, FTC can refile these in a different court and those types of things, on and on and on, but throw it out with prejudice, and then it kind of makes all these points moot. Now, one thing that I want you to make you aware of as an investor is, sure, let's just go down a rabbit hole and assume the FTC wins this lawsuit and Facebook is ruled a quote unquote monopoly and they've got to divest away from Instagram. They've got to divest away from WhatsApp. What does that mean? It means you, the shareholder, are going to benefit from that. Imagine if Instagram had an IPO. Imagine if WhatsApp had an IPO, how well and absolutely frothy those IPOs would be, and you, the Facebook shareholder, would benefit either through special dividends, through shares in those companies, sometimes a combination of both. So not necessarily negative, and sometimes the term on Wall Street is this unlocks value. is that Instagram might not be fully valued in Facebook's $900 billion valuation. In fact, this was up over $1 trillion earlier this year. Now we've slipped down to about $967 billion. Some people would argue that if you fully valued WhatsApp, gave it a market multiple, and you fully valued Instagram, again, giving it a market multiple, well, those two companies might be worth way more than the entire company of Facebook combined. And so those are things that you need to think about, that if Facebook goes down a really, really long road of being broken up, sometimes it's not necessarily the worst thing for the shareholders. Now, the other thing that I want to talk about is from a fundamental perspective, the valuation that we're looking at now on Facebook. Okay, this stock's off the highs. This stock earlier this year was at $384 per share. Now we're sitting at about $325 per share. So it has pulled back very consistently over the last few weeks. Now, what has it done to the valuation? Well, it has certainly pulled it back more in line with what we've seen over the last 3 years. At the current time, Facebook's trailing 12-month valuation is currently sitting at about 25 times. Now, what I want to show you is that the entire S&P 500 is currently trading at 33 times. Now, the mean, so the average stock on the S&P 500 is actually trading at about 16 times, and the median is 14. So you have some stocks that are really high valuation and some that are much lower valuation. But in general, Facebook's valuation is actually very, very reasonable, especially when we factor in this company's growth rate. So here's the other thing that I want to point out to you before we get onto the stock chart. Take a look at this from a technical perspective, see the price levels that this one has a higher probability of pulling back to as it makes its way lower. Now, what I want to show you, these are earnings estimates over the next several years. And so we have our December 2021 fiscal year, which is about to end in about 3 or 4 months now. We're looking at about $14 in earnings. That is 39, nearly 40% growth year over year. So analysts are well aligned that Facebook will grow 40% year over year. I guarantee you, when you look at these S&P 500 stocks that are trading way over the mean and way over the average of 33 times, not many of them are probably growing at 40% year over year. Facebook is actually doing that. Now, the forward PE on that is just 23 times. Now, analysts, most of them, in fact, all the analysts that are analyzing Facebook from this year into next, anticipating a considerable slowdown into next year. In fact, we're only going to grow about 13% on that one. But that puts the forward PE at just 20. And as we move through, take a look. Analysts are projecting that Facebook will earn nearly $30 per share by 2026. That is just a couple of years from now. And if the price was the same over at Facebook, we'd be trading at just 11 times forward earnings, way below even the average S&P 500 stock. And so that makes this stock, in my opinion, a very, very good buy. In a lot of ways, these year over year growths, take a look. We're just anticipating 16%, 16%, 16%, and just 11% growth over at Facebook year over year for the next couple years. I think if you're me, you'd consider that Facebook would be able to reach these growth targets. And if they do, it means this stock is going to trade incredibly cheap unless the price obviously continues to rise. Now, what's not rising is the stock. Just in the last couple weeks, this stock peaked out just like literally last month over at $380 per share. And now we are way back down here to about $326 per share, levels we haven't really seen since June. And so while the stock has dipped considerably, just keep in mind that we were here back in June, which is just 3 months ago, 3 or 4 months ago at this point. So the stock has found an area right around 325, 326, which makes a fair amount of sense, but we broke this 330 level. I want to show you this 330 level was acting as support, considerable support for about a week or so on Facebook, and then this stock rocketed up to 380 and has come all the way back down here to 325. The fact that we've broken below 330 has me thinking that this stock is likely headed lower over the coming weeks. In fact, I think we could hit areas at about $10 increments under 325 or so. So that makes 315 in play. Anything below 315 and above 300, I think are excellent buying opportunities for Facebook. Now, the key level, the absolute key level that we're monitoring with Facebook is this $300 level. If you follow this channel every Friday, we analyze companies like Facebook and the other ones in FANG, and $300 was the absolute tippy top for Facebook after it made its rallies off the March and April lows when the virus hit in 2020. So a lot of stocks in 2020 absolutely collapsed and fell off a cliff. And then a lot of them, like Facebook, went on a mega run. I mean, this stock went from 140 to 300 basically over the summer. And then it stalled out there. Okay, we came all the way back down to 260, kind of chopped around, but once we broke above $300 per share back in April on this one, it was off to the races, and like we said, this thing topped out at 380. But we are going to give back, basically, I'm projecting, my prediction on this one is we are going to give back this entire leg here, and then we are going to come back down here, and we might not hit 300 on the head, but I think we're going to come pretty close. Could be 305, 310 on that one. That's where I'm projecting Facebook. If you can get this stock down there at $310 per share, you are getting forward earnings at an incredibly low price, in my opinion. Now, the other thing that we're looking for with Facebook is a reversal, and you might wonder, what's a reversal? So we've got this big old down leg with Facebook, and I tell you what, these up legs, they don't go in a straight line, okay? This stock dipped, and it went up and down, but the trend was up. The same thing happens on these down legs, okay? They go down, they go back up, they go down, they'll come back up. Expect Facebook to bounce around a little bit, but the trend is down, and the trend is down until it's reversed. And what's a reversal? In my opinion, you start creating higher lows. So I want to show you back here an example of this. And so here's where Facebook bottomed out down here at 245. And in fact, $245 is easily probably a 52-week low for this stock, or very close to that. And so we put a big old red candle here. We put a solid green candle. When did this stock make a sign of a reversal? Was actually this green candle here. Notice we had all along this down, we had low, lower, low, lower, low, lower, low. You're constantly going lower. And then when it reverses is when you make a higher low. And I like it to be at least the second candle, okay? Because we made a low here, a higher low, and then we made another higher low. And you might say, I'm not getting this stock at the bottom. Well, it doesn't matter, right? You could have bought this stock right here. You got confirmation that the lows were taken out. Now you're making higher highs, and you bought this stock, say, at $260. Well, a couple days later, it was at $284 per share. And obviously, a couple months later, it was up close to $380 per share. So that's what I would be waiting for with Facebook, is we either need to come down here to clear levels of support, which right now, we're looking at about $315 per share on this one, which is about $10 lower. And then lower than that, we're looking between $300 and $305 on that. Those would be areas of support where I'd tiptoe into this stock. If we come down to these levels and then start making higher lows with some candles, well, then I think you can definitely be more aggressive. And again, the last thing that you want to factor in is we've got earnings on October 28th, and that can send the stock soaring. If they happen to have great earnings, the stock pulls back and then everybody adjusts their estimates and EPS and those and forward earnings. Well, then this stock might look wildly undervalued. But if Facebook comes out on October 28th and lays an egg and it's an absolute disaster, well, that can break the stock even lower. And then potentially we could give up this entire leg and come back into our consolidation zone with Facebook, maybe potentially coming all the way back down to the $260 level. So while these stocks have pulled back, Facebook in particular, the news is negative. There's going to be a lot of attention on this stock when we get into the areas where Congress will start discussing things. But from a valuation perspective, this stock is pulling back to absolutely phenomenal levels. And if you believe that this company will just continue to grow mid-teens, which over the last year it grew 40%. If you think that growth rate will come back to the mid-teens, well, I tell you what, you're getting this stock at a screaming hot deal. And if we can pick it up here south of $315 per share, I think you're on to a long-term winner. Obviously, we're talking from a buy and hold perspective here. Over at the investor channel, trades and shorter term stuff obviously can be traded far differently than what I've described to you. Hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.